Legendary investor Warren Buffett was just interviewed on CNBC for the first time since last year's Berkshire Hathaway Annual Meeting. In this appearance, he shares his thoughts on the 2023 economy, banking crisis, inflation, interest rates, AI advancements, and his newest stock buys. Despite all the market uncertainty, Buffett emphasized,
"Just keep doing the same thing you were doing yesterday and the day before."
In all seriousness, that statement has more wisdom than you think. At the ripe age of 92, Buffett is still focused on investing and building the future of Berkshire Hathaway. This interview takes place in Tokyo, Japan, where Buffett and future CEO Greg Abel traveled to see some of their latest investments. More on that later. In this video, I'm going to share all the most valuable insights from Warren Buffett's latest public interview. But first, let's roll the intro. My name is Zach, this is Dividend Data, and you should leave a like and subscribe if you enjoyed the video. As I mentioned, Buffett is in Tokyo to visit some of his latest investments. That is the top 5 trading houses in Japan: Mitsubishi, Mitsui, Itochu, Marubeni, and Sumitomo. I may have messed up some of those names. These trading houses are basically conglomerates that control Japan's import and export of metal, textiles, food, and other goods. Buffett first acquired stakes in these firms in August 2020 in an initial purchase worth roughly $6 billion. Today, it was announced that he will be increasing his ownership stake to 7.4% in each of the 5 companies. Speculation is that it could grow from there. Let's see what Buffett had to say about this.
Why did this trip happen, and why did those investments happen to begin with?
Well, the investments began maybe close to 4 years ago, and I was looking at company after company, as I do every day, and I just thought these were big companies. They were companies that I generally understood what they did. Some was similar to Berkshire in that they owned lots of different interests, and they were selling at what I thought was a ridiculous price, particularly the price compared to the interest rates prevailing at that time. And so I started buying all 5 of the 5 largest trading companies, and by my 90th birthday, August 30th of 2000, whatever it was,
2020.
And we had bought just somewhat over 5% of each company, and we were buying identical amounts. So we announced at that time we bought this 5% interest in each of the 5. I wrote a letter to the CEOs of each of the companies saying the same thing, that we would never buy, Berkshire would never buy more than 9.9% without their consent. And that was my word. It was Berkshire Hathaway's word, and they all welcomed us in, and their results have exceeded our expectations since we purchased the group. I think their dividends on average have gone up 70% or something like that, and we now own 7.4% of each of the companies. And I just Greg and I together, we wanted to come over and talk to them, and so we got on a NetJets plane and plug and flew over, and we have had a terrific time meeting each of the 5 sequentially over the last 2 days, and it's been fascinating. And we feel even better about what we couldn't feel better about the investment. It's worked out very well so far, but we'll be in these stocks 10, 20 years. I mean, we weren't buying with the idea they go next week, next month, next year.
Buffett clearly views his initial investment as a success, citing that the dividends paid have grown 70% since opening his position. In the following clip, Buffett and future CEO Greg Abel discuss how this deal has the potential to grow into a larger partnership long term. Additionally, Buffett adds more context about why they were a great investment opportunity.
We've clearly made it, each time we've met with them, we said we very much like the core investment, but to the extent they can identify an incremental opportunity that we could do with any of the 5 companies, we would very much evaluate it quickly. And Warren highlighted the bigger the better, and that he'll answer the phone on the first ring.
And we'll never run out of money. I mean, they can call us anytime, and it may be that what they have interests us, it may not, but they'll have an answer, bingo. And if we make a deal, the money will be on the way, and we look forward to it.
People look at this and say, okay, Warren Buffett is putting his stamp of approval on investing in Japan, basically. Is that an accurate read?
Well, it was an accurate read, but it was an accurate read a couple of years ago, too. I mean, I was confounded by the fact that we could buy into these companies and, in effect, have an earnings yield of maybe 14% or something like that, with dividends that would grow. They actually grew 70% during that time. And the people were investing their money at 0.25% or nothing. And that 0.25%, if they put it out for many years, wasn't going to grow, and the 14% was more likely to grow than not. And if that doesn't look like something sensible to me, that's as easy as it gets. But it's turned out to be better than I thought it would be.
After discussing this new investment, interviewer Becky Quick went on to ask Warren about the latest economic news of 2023. First, he addresses the recent banking crisis, the safety of depositors, and whether or not he thinks more banks could fail.
Is this banking crisis 2.0? What would you call what we've been seeing happen?
Well, I would say that some of the dumb things that banks do periodically have become uncovered during this period, but they haven't made it the same sort of mistakes that they made back in 2008 or 9. But they have mismatched assets and liabilities, and bankers have been tempted to do that forever, and every now and then it bites them in a big way. It's happened before. It's happened this time. It'll happen again someday.
Are we through the banking crisis at this point?
Well, we're not through with bank failures, but we are through the depositor. The depositors haven't had a crisis. The owners of banks may have lost a hell of a lot of money. The people who bought the debt of the holding company, they may lose a lot of money. People can lose a lot of money, but the depositors aren't. And so you don't need to turn a dumb decision by managers into panicking the whole citizenry of the United States about something they don't need to be panicked about. It's important that banks retain the confidence of the public, and they can lose it, in seconds. The FDIC is in effect, a very peculiar mutual insurance operation that is run by the government but is financed by the banks. And FDIC had $120 billion or so at the start of the year, and that's all money that banks have paid in, less what the FDIC has had to pay out on losses. If the FDIC has to pay out $250 billion this time or $300 billion, they just assess the banks more, and they don't do it in a very business-like manner because the public has the impression that the FDIC is the United States government and that so on. And of course, they do appoint the people, but the costs of the FDIC, including the cost of their employees, everything else, is borne by the bank. It's incredibly important that your banking system run well in the country. It just isn't going to work unless you have a banking system that works, and you don't want them to create periodic crises unnecessarily. I mean, 2,000 banks failed in, I don't know whether it was 1920 or 21, but there's only, I don't know, something less than 5,000 banks in the United States. And I mean, it was a paralyzing thing to have a bank failure in this country. And my dad lost his job in 1931. He lost his savings. And it was because a bank failed that he worked at downtown in Omaha. And people shouldn't be worried about losing their money and the deposits they have in an American bank. And today they have no reason to worry. But the message has gotten very confused and people don't really understand how it all works.
To recap, Buffett thinks that many more banks could fail, resulting in economic loss for stockholders and executives. However, depositors will be protected, and keeping confidence in the banking system is of vital importance. Next, Becky asks Warren about the 2023 American economy and whether a recession is likely. Buffett has a unique vantage point as the CEO of the largest U.S. conglomerate. Therefore, he gets to comb over lots of real-time economic data from his operating companies.
We have heard recently from Jamie Dimon in his annual letter at JP Morgan. He says a recession is much more likely now. Janet Yellen was just speaking, I think in the last 24 hours, although it's hard to track from here when things are happening, has just said in the last 24 hours, I think, that the U.S. is in better shape now than it was 6 months ago. Which of those camps would you put yourself in?
Well, I know what a lot of different businesses are doing, and I just got a report from one of them that happens to be in the retail-related business. And in any event, it was minus 22% in February from a year ago. They didn't think that was going to happen.
Sales? You mean
in sales.
Profit? Yeah,
in sales. Profits are down a lot more than that. On the other hand, some of our businesses are still doing fine, but they all are reporting that the new, some of them are living off of orders were placed months earlier and that sort of thing. But it's a tougher world out there in a great many businesses, not in the insurance business. Insurance business should be better this year than last year. That doesn't mean it will be, because we can't predict everything that happens, but on a probability basis, it should be better than last year. And the railroad business is down in carloads carried, but it isn't dramatic. And of course, we've got a utility business, and that doesn't really vary much with things. But overall, I think people that run our businesses that do have any sensitivity to the economy are surprised at where they are now compared to where they thought they were going to be 6 months ago. That doesn't mean the world is coming to an end or anything, because 58 years I've been running Berkshire. I mean, we've run into all kinds of problems, but that's what business is about. And we run our business so that we don't depend on everything being big hunky-dory always. We run it so that we will be the last man standing. And that's the way, if millions of people are going to give me their money and tell me to take care of it, we're going to try and take care of it. And if we don't make as much money as we might have if we'd leveraged more or done other policies, so be it.
But you think a recession is more likely now than maybe you would have said 6 months ago?
Well, I think most of our managers would say that they are surprised at where they are now compared to how they thought they were going to feel 6 months ago at this point.
And
in a lot of businesses, but not in the insurance business, but I think the people at the railroad are somewhat surprised that car loadings aren't a little higher rather than a little lower, somewhat lower. But most of the stuff we carry is essential, but it reflects what's happening. And of course, supply lines were so disrupted and everything a year or two ago that, no economic figures are pure, but I'm just telling you my impression. And I look at the numbers every day. I mean, I look at our Easter sales day by day at the candy store, and I can look at California versus Washington versus Oregon, and I get them the next day. I mean, so I love figures. You can say that it doesn't really do me that good to be such a figure nut, but I just like them when I see them.
In terms of the potential for a credit crunch coming through what the banks are going through right now, there's been a lot of speculation about what that could mean to the economy. Is it going to mean a 0.5% hit to GDP? Is it going to mean a 1% hit to GDP? What would you guess? I
would say that I've been in business running Berkshire for 58 years, and I've never found economic forecasts of any use to the company. And all we have to do is keep running every business as well as we can, and we got to keep plenty of cash on hand so that people can keep making intelligent decisions rather than those forced upon them. And that's all we know how to do. And if I depended in my life on economic forecasts, I don't think we could make any money. I don't know how to do it. And people want to get them, so they get them, but it has no utility. When I find one of our companies has hired somebody to tell them what's going to happen in the economy, I mean, they've thrown the money away as far as I'm concerned.
Overall, Buffett says that many of his managers are surprised by the economic slowness compared to expectations. However, he emphasizes that this is all short-term uncertainty. All he can do is continue making rational investing decisions and have his companies operate the best they can in any environment. This is so true. Buffett cannot control the macroeconomy or predict where it's going. All he can do is act rationally and focus on what he and his businesses can control. In the next question, Becky asks Warren about the latest inflation data coming in lower than expected and whether he thinks this will change the Fed's view on interest rates. He responds with a long-term perspective rather than speculating on the short term.
We don't make our decisions as to whether to own part of a company for the next 20 years. We don't have any idea what anybody's going to do next week or next month. And when I was buying Berkshire between 1962 and 1965 of control, it didn't really have anything to do with it. All kinds of things were happening in the economic markets all the time. But we haven't changed our course, in 58 years. And we just want to buy good businesses, and we want to buy people we like and trust and at a decent price. And we'll keep doing that. And we'll keep buying Treasury bills every Monday. And we haven't missed a Monday yet. And we keep all our money short, and we keep it in treasuries, and we were getting 4 basis points, which was $40 million on $100 billion worth, and now we get almost 5%, which is $5 billion. So we've got 100 times the earnings. But it doesn't make any difference. I mean, that is there to be the strongest company you can imagine, and also to take opportunities when they come along. We'll just keep doing that. That's what we've been doing for 58 years. And I can't tell you what the Fed was doing when I was buying Berkshire day by day or week by week or month by month or year by year. We were buying Berkshire, and we've kept buying things. And we don't make stock market guesses, and we don't know how to profit by looking at broad statistics and guessing what stock markets or bond markets will do.
But you have said that you do pay attention to interest rates, and that interest rates are like gravity on equity prices.
There's no question about that. I mean,
so where's the level of gravity? Are we on the moon? Are we on Earth?
Well, we're in a way different position than we were when essentially what the option was to get 4 basis points on bonds, and that changes the value. It changes the value of real estate, changes the value of equities. It changes everything. But that's all happened in my lifetime, various ways, all the way up to a 21.5% prime and down to 0, which nobody thought we would ever get to. You can read the economic textbooks by Paul Samuelson, a wonderful man, and it's a 900-page textbook that every kid went to school with, and you look for negative interest rates in the index, and there's not a word on it. I mean, so anything can happen. And we're prepared for anything, but we like to do things. Over time, we want to buy good businesses. It's that simple, and we always want to have money.
Becky then follows up on interest rates, asking if Warren thinks Fed Chair Powell waited too long to raise interest rates after the pandemic.
Did the Fed keep rates low for too long after that?
Who knows? Who knows? We won't know. I don't know what they precisely should do. Nobody does, and they follow conventional wisdom and all of that, and sometimes it works out and sometimes it doesn't. But since 1942, we've made all kinds of mistakes in this country, and we'll continue to make them. But somehow the system works pretty damn well. I'd rather own stocks than bonds over many years. I'd rather own part of America than try to squirrel my money away somehow. Other place I thought, maybe in Switzerland, Credit Suisse or something like that. I've been in a golden age ever since I was born. The GDP per capita is up like 6-fold or 7-fold in one person's lifetime. There's never been anything like that in the history of mankind. And so, we love to complain about wherever we are, but most people don't work on Saturdays and don't work on Sundays, and when I was a kid, everybody worked on Saturdays. I mean, the world has changed so much for the better.
Here, Buffett discusses how productivity has massively increased over his lifetime. This has resulted in dramatically more wealth and prosperity. Technological advancement and automation have been a major tailwind pushing this trend. In 2023, artificial intelligence is the big point of conversation after the viral launch of ChatGPT and subsequent AI advancements. It has the potential to radically increase productivity over the long term. However, many are worried about AI safety. Even though Warren Buffett is 92 and famously not a tech guy, the CNBC gang asked his thoughts on the latest developments. Luckily, his friend Bill Gates did stop by and give Warren a demo on the latest AI progress.
We keep talking about ChatGPT and potentially how that could transform AI, how that could transform our economy in the future. And obviously, there's also lots of questions about whether AI is dangerous and we have the right policy set around it. And I was curious if you've given much thought to any of it.
I think it's something I don't understand at all. But Bill did come by about, 4 or 5 months ago, and he said, I'm going to show you the latest thing, what can be done. And then he, I actually said, take the song My Way and write it in Spanish, and have it encompass my views on what's funny or what's likely to happen in the economy. And 2 seconds later, it comes out that rhymes and does all these wonderful things. The time it could save you if you were doing all kinds of things is unbelievable. But what I said to Bill is, I said, just let me know what I can ask. How are you going to ruin the human race? And then let me know. Someone unplug it or whatever I have to do at that point. And I think it's an incredible technological advance in terms of showing what we can do, but I don't know whether we know what happens. And I was listening Eric Schmidt, and
Yep.
Eric was saying, we don't know where this takes us, and maybe we ought to pause it for a while. Well,
right.
I don't know 1/100th of 1% about physics or anything else that Eric knows, but I come to the same conclusion.
So that wraps up all of the best moments from Warren Buffett's latest public interview. His long-term perspective and wisdom are always valuable to hear. Make sure you subscribe to the channel and check out my other Warren Buffett videos linked here. You can sign up for dividenddata.com to access my stock research tool and join a Discord community of like-minded investors.